traders, Marius here. I wanted to show you a little bit of technical analysis and why I think this would be a great double top. This would have been a great double top to take on the pound dollar 5 minute. Just after this happened, just after the big news event on the pound, the construction PMI, it wasn't really that big, but it moved the market quite a bit. Okay, let's get into it. First of all, market came up into this level. It has broken recent lows. As you can see, it recently broke the lows right here. They're quite big lows as well. It was a big shelf. It just broke through that on the hourly. And now we're going to show you on the 5 minutes how we could have gone into a trend continuation trade. Okay, let's start off with the analysis. First of all, let's draw a retracement from the last high down to the low. And as we can see, we get a 78.6% retracement. There we go. Now, if we draw an inversion from the last move down, we can see we get a 1414 in the same zone, roughly. Now, it's not going to be exact. When it is, it's wow, but it's not always going to be exact. And then we're going to draw another retracement from the bigger move up, and we see we get a 50% right in there as well. Oh, wait. Okay, and then we're going to go one more move up, and we're going to draw it again. Bam. Okay. Now we get a 38.2 as well from the bigger move up. So as you can see, there's quite a lot of Fibonacci confluence at that level. Now, my thought process was, it comes up, RSI goes overboard. It's at 81.9. Wait, I'll just move the data box. There we go. It's at 81.9 on the 5-period RSI. RSI goes overboard, comes back down, puts in a retracement, and it doesn't touch the 38.2 retracement at all. Comes back up, puts in a double top. Now, I was away from the computer, which is a stupid thing to do, but I was away from the computer and I only saw it when this candle was printing, when it started printing. So by the time I finished my analysis, there was only 1 minute left before this candle closed. So I said, I'm not going to enter the trade until this candle closes. Okay, and it closed above the last high, so that's nullified the double top for me. But I still wanted to show you this and how you could proceed in this sort of a situation and how this could help you with a trend continuation trade. Now, I trade for double tops, three positions. Okay. So let's say you would have gotten in at the close of this candle, which would have made the double top, because it comes up, bam, puts in the V, and then this candle would have set the double top for me. Okay, so let's say you got in at 163.36, right here, 163.36. That's your entry. Your stops should always be above the last high for trend continuation and double tops as well. Above the last structure, and since we're using DSRs, we can easily see structure. So let's say above the last DSR, let's say 163.76. So we're still a bit further away from the DSR. So if the market does come up here and wicks up, our stops are still protected and they're not too far away from it, so that if we do lose, we know quickly that we've been wrong. Okay. Now, since we have a distance, this is how I trade my double tops. I have to have a distance of 1-to-1 from my stop loss to my entry, from my entry to my target. Now, since this is at 163.36 and the stop loss is at 163.76, that's a difference of 40 pips per position. Now, target 1 should be at a 40 pips lower than the entry. So 163.36 minus 40, that goes to 162.96. So the target 1 should be somewhere around here. There we go. Now, this comes up beautifully just into the previous structure level, as you can see. It comes up perfectly into the previous structure level. And now from here, we take another 40 pips, which brings us to 162.56. Wait, just move the data box. 152.56, which is right at the bottom of this DSR. It actually has to break the DSR. So if this sort of thing happens, I tend to adjust the targets into up higher, so I don't end up, I don't have to break the DSR to be able to take my targets. So let's say 162.58. And the third position just trails at the fib dots. Okay, I'm going to pause the video, and when the market decides to move in either a positive or a negative direction, I'll start it again and then we'll talk more. Okay, bye for now. Alright traders, just wanted to show you a quick update. Price action came up, as you can remember, retraced back down here. It still didn't break the double top lows, the valley of the double top, comes back up, puts in another double top, and makes it a triple top. Well, actually a double top after it broke this structure level. The problem with this one is, as you can see, RSI did not go oversold. It's 79.05 and 79.11, so still can't get in. It's a bit annoying because I really like this level. I also wanted to show you on the 60 minute, I forgot to show you that, the structure level. Wait, I'll just put in for the little double top. There we go. Where is it? Okay, for the little structure level, it comes up perfectly. It retraces perfectly into quite a big structure level over here. As you can see, it's a very nice shelf. And there we go, right at the top here. It's a very nice shelf and a very nice place to for a trend continuation trade. Also, it can come back up in here, but our stop loss is over here. So even if it does, we know we're wrong before we get there, and when it gets there, we can look for another opportunity to get in short again. Okay, gonna leave it there for now. Again, and yeah, we'll see how this progresses. Alright, back for another update here. As you can see, it broke underneath the previous fictive double top and the last one it just put in. So if once it does this, I can move my stop loss to break even. No, well, not to break even, I can move my stop loss lower. So it doesn't have to be above the last bit of structure, because this triple top has just created a new structure, and price action has told us that it will reverse from this point. So we will put it above the top 44, somewhere around 57, 163.57. And this has reduced our risk. That was initial. This is initial stop loss. Okay, and then copy paste, and then new stop loss. New stop loss is 163.57. 56. This has reduced our risk by 20 pips per position. 3 positions, that's 60 pips risk reduced. So now we have a better risk reward than a 1-to-1. Okay, as this breaks down, I will come up with more updates. So hang on tight. Alright traders, we're back, and we had target 1 hit over here. As you can see, it blew right past it, would have taken it. Now the stop loss is not up here anymore. I would have trailed it 1 pip above the fib dots. Here it just touched the fib dots, and the high was 32.7. The fib dots printed at 32.5, so I would have had it at 33.5, so I would not have been stopped out up there. The trade would have still gone on, and the stop loss now is at 163.11 actually. Okay, this is the new stop loss position. Target 1, 40 pips in the bank, well, would have been if I had my entry reason. 40 pips in the bank, and yeah, that's about it. I still didn't get an entry reason to get into this trade. I would have loved to be in this trade, but you can't have them all. Alright, well, I'll come back as this progresses on. Bye for now. Alright traders, back again. As you can see, price action came down after it hit the target 1, retraced a little, comes back down, puts in a double bottom, RSI oversold, double bottom RSI divergence at structure level, except one of my criteria doesn't meet it. It hit a 38.2% retracement, so I can't take the double bottom. So this trade is I still would have been short from here, where the entry was at 163.36, where it should have been. And yeah, we'll just see how it plays out. Alright, update you as soon as something else happens. Bye for now. Alright traders, back again. Now, we would have just been stop loss, our stop loss would have just been taken. We would have been stopped out right here at 163.11, right where the blue line is. So, I guess this was a double bottom that held. There we go. It happens. But we still, from this trade, we would have had the following. From entry, 163.36 to the first target was 162.96. That would have been target 1 hit for 40 pips. Okay? And then target 2 and target 3 would have been both hit at 163.11. So that's 163.36 minus 163.11, that's 25 pips per position, which is an equal to 50 pips per total. Now for the whole trade, the grand total would have been 90 pips. Now this was a mistake for me because I wasn't at the computer when I was supposed to be. I should have entered here and I should have been in this trade, and I should have made 90 pips. Should have, could have, but didn't. This is what I was talking about in the blog post and in the videos that I did on Saturday. Mistakes. Mistakes cost you potential money. Now this is potential 90 pips that I didn't get. So this is another mistake in the written down. I hope I don't make any more, and I will get onto producing and launching this video so you guys can see basically how I would trade and how mistakes can ruin everything. Alright, have a great rest of the day, and I'll see you guys later.